did you? Anything you want.
US Dollar Outlook 2018, charts suggest dire future for the greenback. Technical analysis suggests US dollar could drop in 2018. Basic economics, when interest rates increase, the currency appreciates in value. Some may be thinking this could be true for the US dollar, as the Federal Reserve is raising rates. Sadly, this may not be the case. Here's why. If you look at the US dollar charts, they suggest there's a lot of bearish sentiment toward the greenback. Look at the long-term chart of the US dollar index below. The index essentially tracks the performance of the dollar relative to other major currencies. For the last 35 years, the US dollar has been trending downward relative to major currencies. With this, remember the most basic rule of technical analysis: the trend is your friend until it's broken. If you look at the dollar price action between 2016 and now, the greenback made an attempt to break above the trend, but it failed. So, the path of least resistance remains downward on the US dollar. Going against the trend could be a big mistake. Shorter-term charts say bearish sentiment prevails. Look at the shorter-term chart below. At the bottom of the chart, a momentum indicator called the Moving Average Convergence/Divergence (MACD) is plotted. Since 2015, the US dollar index has remained relatively flat. It ranged between 93 and 101. As this was happening, the MACD was trending lower. Understand that when the MACD trends lower and is in negative territory, it suggests that sellers are coming in. And whenever this sort of divergence happens, where the MACD is trending lower and the price is trending higher or staying flat, a downward move follows. Will it be the case for the dollar as well? It's possible. Look at the even shorter-term chart below. On the chart above, a technical analysis indicator called the Fibonacci retracement has been plotted. At its core, this indicator tells where the next resistance level could be. Usually, the 38%, 50%, and 62% retracement levels are used by technical analysts as possible resistance levels. The US dollar hasn't even been able to make it to the 38% level after making a low in early October. This says bearish sentiment is prevailing. US dollar outlook for 2018 and beyond. More pain ahead for the greenback. Dear reader, looking at the charts, I am not too optimistic about the US dollar going forward. If the long-term trend persists and the sellers remain dominant, it wouldn't be shocking to see the greenback drop to 2014 lows. In 2018 the dollar index could drop as low as 80. That's 15% below where it currently sits. Keep in mind, if the dollar declines in value, assets like gold could rise significantly in value. What would change my outlook? If the US dollar index suddenly makes a move above 103. If that happens, it would mean the long-term trend has been broken and there could be an uptrend in the making. Trump tax cuts to send the US dollar tumbling? Here's why this can happen. Soaring US national debt could mean lower US dollar. The odds of a US dollar collapse are increasing. If you ignore the signs, you could be making a big mistake. Before going into any details, let's be very clear, the US dollar collapse could take years. At first, there could be gradual deterioration. And then the sell-off will escalate. Why would the US dollar collapse? Let's get one thing straight, the only thing holding the dollar up is confidence. Investors, central banks and businesses think it's worth holding. There's nothing more to it than that. The fundamentals that should back the dollar are tormented. One thing that investors need to pay extra attention to is the US national debt. The US government has amassed a national debt of over $20 trillion. In nominal terms, the government has the highest debt in the world. Sadly, it's expected to increase. Even with conservative estimates, there are no budget surpluses in sight for the next decade or so. Only budget deficits. With this, know that every time the US government incurs a budget deficit, the national debt goes up. By 2022, the US government's budget deficits are expected to hit $1.02 trillion. Between 2018 and 2022, budget deficits could amount to $3.93 trillion. Between 2018 and 2027, budget deficits for the U.S. government are expected to be $10.11 trillion. So, in the next 10 years, we could be looking at the U.S. national debt hitting around $30 trillion. Add Trump tax cuts to the equation. The Trump administration is working tirelessly for tax cuts. The Senate recently passed the bill, and it's very likely the process will go smoothly. Before the Christmas holidays, it's expected that President Trump will be signing the bill. With these tax cuts, corporate America will be paying lower taxes. You see, with these tax cuts, suddenly the U.S. government will be getting less in tax revenue. If its spending remains the same, don't you think it will impact the budget deficit? We could see it soaring. And, obviously, the national debt would skyrocket. Trump tax cuts could be like throwing more fuel on the fire. Outlook for the U.S. dollar, bleak at best. Dear reader, if any government did what the U.S. government is doing, its currency would have lost a significant amount of value. National debt and soaring deficits are not good for currency. In the Eurozone, there were governments that were spending without remorse: Greece, Spain, Portugal, Ireland, and Italy. These governments ran into trouble. All of a sudden, we saw the currency plummet. We are starting to see investors lose confidence in the U.S. dollar already. If you look at the U.S. dollar index, it tracks the value of the dollar relative to other major currencies year to date. The greenback has lost 10% in value. Just look at the chart below to get some perspective. I repeat what was said earlier, if you are expecting the US dollar to collapse all of a sudden, you could be making a big mistake. With its fundamental tormented, it wouldn't be shocking to see a gradual decline at first, and then the selling will escalate.